Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on February the 11th, 2020 with the daily Forex market analysis for you. And before we get into that, real quick, we want to go over our disclaimer just to remind you that this webinar is for illustrative purposes only. And with that, we're going to jump to our live screen where we have the Forex-Trading-Unlocked.com website already pulled up, and we already pulled up the workstation tab to pull up that page. We're going to pass the numbers that are coming out for the rest of the week. There are some relevant economic numbers that are coming out, but we're going to just take a look right away at what's going on. So today we have a little bit of a turn on the US dollar after the rampage that it's had for the past week and a half, actually month and a half actually. And we have a little bit of a reprieve going on from the bearish action. So right now we had made a lower move low today, as you can see, and right now we are slightly positive on the day, and we are only a few hours away from possibly having the first positive close in quite some time. So what do we have here? Do we have a potential bottom happening? Maybe, maybe not. Remember, we had this head and shoulders up here where we had completed the downside target a few sessions ago. So right now we're kind of looking for a little bit of a pause for this current slide that's going on, maybe a little corrective move up towards this $10 area where this caramel colored line is. You're going to have a lot of directional resistance that comes in here. However, should we start to get a corrective move higher over the next few sessions and make a challenge of this $10, then we are targeting this $10.23 up to $10.65 target zone. That's about pretty much it. The market, no matter what, is in a bear trend, and the fundamentals right now, especially with the coronavirus building, and I believe today they topped the totals of over, I don't even know how many deaths it is now. So, but the numbers are pretty staggering. So, but I think that the market might be ready to shrug some of it off. Plus, we had some Fed speak come out of the U.S. that may, for at least a short run, bring back some dollar bears and look for a profit-taking move. Remember, the slope here in the Euro-US dollar is very, very extreme. We haven't had any up days or positive days, even remotely, for a week and a half, except for this one big bullish surge here. Not that we're looking for something like that, but I think we should begin to start to set a little bit of a base. We're coming into strong support here down where it touched out today. The low was 109.07, or excuse me, 108.91. That's a pretty key area right now. So I think that we're going to probably see a little bit of a gyration up towards this, back towards this $10, and we'll see if we can get a sell-off in the dollar. If we do, I think you'll get a little boost to the Euro-US dollar. However, overall, we are a bear for the Euro-US dollar. So right now, we're only looking for a potential corrective buy. I would use the low today of $1.09, or excuse me, 0880 or 90 rather, as your risk reward or risk level down here. If you're an aggressive bull looking for a correction, this would be a cheap way in right now. If you're a bear, I don't know if you're necessarily selling it in the hole, but I think you've exhausted most of this current leg down, and we're looking for at least a couple days of a little bit of a turn, maybe get a half a dollar move at least as we try and make a run at this $1.10 even area. So now let's look at the British pound, US dollar, and see how that's faring. So the first cross we looked at is the major cross versus the dollar. The euro is positive, so is the pound. So that means that the dollar index is under pressure today with the two majors being positive. The British pound made a lower move low yesterday. So the question is it a bull or is it just going back into this range trade? Well, most likely we're going to key off of this $28.64 now as an aggressive bull. Should we settle positive today, we have a nice opportunity to, I think, make a run back up towards this $32.09 last lower move high. If we take this out, it just expands the range trade. I mean, no matter what, this market has been in a bull market since the summertime. The thing is that as of late, it has definitely consolidated into a very wide range trade, especially since the Brexit date has already been passed. But right now, it looks like we have a short-term buy signal. We have to wait until this afternoon for a confirmation. But if you look at this chart a little bit bigger here, this would be, if we get a positive close today, we'd be having a 3 inside up short-term buy pattern since the market has been trending lower for the past week and a half, 2 weeks. This would be a short-term positive signal that we could aggressive bulls would be able to use what $28.64 as your risk level. You don't want to be long below that. Definitely below there, we're going to be looking for a test of support as we come close to this $27.65 area. But right now, let's see how the market closes in a few hours. A positive close, especially up around where it is today, gives us a good chance to have a run up towards this $30 up to $31 area, most likely. With that's where you're going to run into some resistance. But if we definitely get a breach of this $32.09, then expect bullish momentum to build. The dollar index has been on a tear for a month and a half, so if we start to get a correction for even just a few days, let alone a violent sell-off in the dollar, then you probably will have a nice big boost to the euro and the pound, as we can see that they're starting to get something. So since Europe seems to be getting a little bit of a lift, let's check with the old Swissy. Well, here we go too. We have the US dollar Swiss, which looks like it wants to make a little bit of a turn as well. The Swiss has been a bull versus most currencies for quite some time. We do have an upside target zone here of 98.22 to 98.70. However, today with a negative close, especially if the pound and the euros if they start to rally, I would think that you're going to probably get a boost from the Swiss trade as well, which means a lower dollar Swiss currency cross. So we have made a higher move high as of today. A negative close, short-term correction on the table. That doesn't make us a bear overall. We could still definitely get back, turn around, and take out the high from today and make a run at 98.22, 98.70 upside target zone. However, if the dollar is under siege, and especially with what the Fed came out today, as far as inflationary speak, there's a nice chance that we might have a dollar sell-off coming in for at least a couple days, maybe even a week and a half. Now, let's see what's going on with the US dollar Canada. So we've seen dollar weakness now in all your European crosses. Oh, here we have, this is a negative indication here. We have a bearish engulfing line setting up on the US dollar Canada trade here. This could be setting up for a nice little slide that targets this $31.40 to $30.94 downside target zone. Only a rally above yesterday's higher move high, which definitely has this market in still a bullish to neutral posture. However, a short-term correction, especially with a dollar sell-off, this could be a nice opportunity for your aggressive bears to jump in on potentially swing trade that is maybe setting up. We have to see for the close today. We don't want to be presumptuous. It's 1:10 Chicago time right now. We still have a few hours. This market could turn around and not be down like it is now before in a couple hours, and all of a sudden this trade's off the table. However, if this market was to settle where it's at now to even a little bit lower, that would be a nice indication that we'll probably see a continued sell-off of the U.S. dollar Canada, at least down towards this dollar to half, $32 even. $31.40 down here may be a little bit extreme, but if we do start to see the dollar unwind, then we have a really good chance at this one unwinding as well. Now here's an anomaly. I don't know what to say. We can tell you about this one. We have the US dollar Mexican peso, which has been a bear for a while, and it looked like it wanted to try and make a bottom. But we made a lower swing high yesterday and today, and now we're trading back right in the middle of this range between the low set a couple days ago and the high set a couple days ago. So we have the 1882 down to 1856 as our breakout range. Anything in between here, we're kind of neutral to sideways. Above 1882, we're bullish up to about 1910, 1920, but overall this is a bear market for the US dollar Mexican peso. And especially if the dollar index starts to take a hit, then we're most likely going to have a continuation of the downtrend in the US dollar Mexican peso. So if your kids are going on spring break in a couple of weeks, a couple of months, then trip's probably going to be a little bit more expensive than it has been the last couple of years. All right, now we're going to go to the US dollar Japanese yen. Our flight to quality currency in the Asiatic region, of course, with the coronavirus, we know that Japan, they have that vessel that's off the coast of Japan right now with all the people on the cruise ship with the virus, and the numbers have expanded there as well. So this market has started to seize up into a sideways trade. It is overall a bull market, the US dollar yen, and even if the dollar sells off, I'm going to have to say that probably the US dollar yen is going to continue to rally. This trend has been going on no matter what the dollar has done for the past year and a half, basically half a year for sure, and pushing a year. So that being said, I think you need to really be mindful of this pivot here at $1.09 69 here, this caramel colored area. Above here, it keeps us choppy the higher, looking for a pressure of resistance up to $1.1030. A breach of this level then has the bulls really, I think, momentum building with because we have an upside target right now of about $1.12, $1.12 half for the longer term. So right now we're looking for either a dip to buy or a breakout to confirm bullish momentum for this US dollar Japanese yen trade. Now let's look at the Australian dollar, US dollar. This market's been in a world of hurt for quite some time. We had a bottom set 2 days ago with a lower move low. We're a little bit positive today here. I would be very cautious with this one. Only a breach of 67.76 here confirms higher move highs and a neutral to higher basis with bias, with more of just a neutral bias forming for a corrective rally. This has been quite a sell-off since the year began. This market's been in the gutter ever since the end of the year of 2019. However, Australia has, between the coronavirus and the fires and everything else, has a lot of issues that it definitely weighs heavy on the Australian dollar. However, inflation coming into China and the US may actually help to fuel a short-term bounce for the Australian dollar, US dollar. So we have to be mindful of this. I think for aggressive bulls, you used the low of 2 days ago at 66.62 as your risk level. Anything below there, you do not want to be long. You're most likely going to be pounding new lows, because if the dollar starts to turn, get bullish again, you're most likely going to see this happen here. But short term with the dollar taking a little pause and maybe even a little bit of a correction coming, we may have a nice little chance for an aggressive bullish move up to a nice breach of the 67, 67 or 76 area, but probably not going to see much more than the 68 half to maybe 69 on any real extreme rally north. Okay, now let's look at the New Zealand dollar, US dollar. So we're in the same trading zone in Asia trying to see what's going on, and well, here we go. We have a potential bounce forming here. We have the market right now there's a potential engulfing buy signal happening right here. We still need a little bit of a higher close to confirm this. Let's see, the open yesterday was at 64.019 and we're at 64.02. Okay, so if we settle where we're at now or higher, we would confirm a short-term bullish engulfing line, which would give us the opportunity to possibly catch a nice rally in the New Zealand dollar, US dollar. So we made our trip around the world. We didn't look at another exotic though. We're going to look at the US dollar TRY. Okay, so the US dollar Turkish lira has been hovering below highs. It looks like right now it wants to make a little correction. Overall, this market is a bull. Just like the US dollar Japanese yen, I think that any dip in these markets is a dip to buy. I would use caution buying into these levels right here. Any trading below this 598.85 area has us in a corrective mode, choppy area, looking for a test of support. But only a failure at 583.67 here would have us really breaking down and changing the outlook for the longer term trend, which is bullish for this market. So the US dollar is under pressure today. Let's go back to the euro US dollar and see how this is faring. As you can see, this one is starting to turn around and looks like it wants to go higher. So we'll see how the markets end up in a few hours, and then we'll see. We have a lot of potential buy and sell signals shaping up. So please subscribe to our YouTube channel and for Forex Trading Unlocked, and see what happens later on, because right now we just looked at a bunch of markets with a bunch of potential buy and sell signals to take some action on. So for your Forex traders and futures traders, options traders, and binary options traders, I think later on this afternoon or this evening, definitely for tomorrow, we're going to have some potential opportunities to be taken advantage of. So come and check us out, and always check us out at www.forex-trading-unlocked.com. And speaking of the buy and sell signals, if you want to really learn how to trade them, as we talk about them, we have at the bottom of every one of our website pages, High Probable Japanese Candlestick Patterns. It's a book that you can read how to execute these trades, and it'll give you examples on how to use them in the Forex markets, the futures markets, the futures options markets, and the binary options markets. Remember, you can always you can get outright long or short the futures or the FX derivatives cash markets, or you can get sell credit spreads and all kinds of other types of options possibilities with the Forex major crosses. And then you even have binary options as well. So we cover this in our book, and if you want to know more about it, come and definitely subscribe to our YouTube channel, and then come back as we start to look for these trade setups and see what's going to happen for the rest of the week. Remember, we're right here at the cusp of Tuesday, heading into the midpoint of the week. It will be nice to catch a couple trading opportunities and make a nice little move in another, counter trend trade right now at the midweek, especially with this Fed news that came out today. If we could get a little sell off in the dollar, it might be a chance to catch a lead on a trade sometime between now and excuse me, and tomorrow morning for a nice move that'll, finish out the week with a nice potential profit move for us, especially if we could catch a rally in the euro that shot us back up from this dollar. We're trading a 109.21 right now. If we can get back up above $1.10 and get back in this $1.10.23 area in the next few sessions or heading up into next week, that'd be a nice move to catch. So we'll see. Definitely want to be cautious yet. We got to wait and see if the signal occurs, and then we know where, at least where our risk is. It's the low from today or the highs, depending on which market we were discussing today. So with that, we're going to say thank you very much, and we will see you later.